Welcome to a Fear and Greed bonus interview. I'm Sean Aylmer. Global uncertainty has seen central banks and investors alike flock to the safe haven of gold, pushing the price of the precious metal to record highs. So, what's it meant for the Aussie gold miners? Well, generally it's been pretty good news. As always, this is general information only. You should always seek independent advice before making investment decisions. Shaun Weick is a senior investment analyst at Wilson Asset Management. Shaun, welcome back to Fear and Greed.
Thanks very much for having me.
It seems that plenty going for gold at the moment. We've got uncertainty, we've got corporate activity, we've got central banks in love with the precious metal. Has there ever been a better time for gold?
Yeah, and China selling US treasuries and buying gold too. So no, it's all happening for gold. I mean, when we caught up back in January, I mean, the core forces, driving the gold price remain largely unchanged. But what I'd say more recently, is with Trump's tariff regime, it's clearly amplified the demand for gold. Obviously, geopolitical risks are rising. You're seeing increased central bank buying, and obviously the inflationary risk around tariffs. And what we've actually seen more recently, which is quite interesting, is the inflows into gold ETFs have started to turn positive in the last month. So you've now got retail buying coming in too.
Is it risky given the gold price and given the valuation of gold stocks? You don't kind of want to get it wrong because there is certainly room to fall when you're a gold miner trading at the valuations they're trading at the moment.
Yeah, I mean, I think the outlook now for gold is getting a bit more tricky. It clearly does depend on, your investment time frame, but we still think it's got a place in portfolios for sure as a hedge. But, we've seen significant share price appreciation over the past 12 months. Valuations themselves, aren't super demanding in the context of where spot prices are, but there's clearly question marks around the sustainability of that. Like, arguably, geopolitical risks are at their peak now, under the assumption that tariff deals are progressively stuck. And if you see geopolitical tensions de-escalate and global growth improve, then I think gold will get belted in that scenario. So yeah, you're never able to time these things perfectly, but we're certainly mindful of the risks, both to the upside and the downside at the moment.
Do you think you will keep seeing the corporate activity? So I think we have Northern Star trying to buy De Grey. We've got Gold Road Resources being bid for from South African organisations. A couple of the smaller guys are talking about merging. Do you expect to see that to continue through the year?
Yeah, absolutely. I think M&A activity is likely to continue to be elevated as, really the well-funded players look to take advantage of improved balance sheets and consolidate the smaller, underfunded players to try and, grow their production effectively. What we're seeing here domestically, like the gold stocks, which the market perceives to have good management teams with, a strong track record of delivery and production growth, are continuing to attract a significant premium. So, I think they're best placed to take out, some of the underperforming or underfunded projects and drive that consolidation.
What are a couple of gold stocks that you particularly like on that basis?
Yeah, one we've liked, is Genesis Minerals. It's a great example of this. I mean, the company's ran by Raleigh Finlayson, who's, responsible for building Saracen Metals up to a $5 billion company before it was sold to Northern Star. Their recent quarterly production update was strong. It's looking, I think, conservative, into the fourth quarter. And, we think there's a fair bit of optionality around their projects that could really drive, a significant uplift to production versus expectations as we look out the next sort of 12 to 18 months.
You mentioned the CapEx in some of these miners is huge, and some of these mines are, still fetching miners are fetching big prices, even though they're not even producing gold at this point. They're still kind of pre-production and probably beyond exploration, but pre-production. It's getting expensive.
Yeah, I mean, you always tend to see a lot of M&A at the top.
Yeah,
given the larger players have such good balance sheets and they've got, extra so much, cash flooding in that they can't really help themselves. So, yeah, I mean, clearly a lot of these projects are dependent on the gold price remaining strong. So, if you do come under a scenario where the gold price materially weakens, then yeah, a lot of the, as the Buffett saying goes, you got to wait till the tide goes out to see who's naked. So yeah, it'll be interesting to see, if we do see some gold price weakness, sort of how it all plays out.
Shaun, thank you for talking to Fear and Greed.
Thanks very much.
Now, Shaun Weick, Senior Investment Analyst at Wilson Asset Management. Remember to get your own independent advice before making investment decisions. This is the Fear and Greed bonus interview. I'm Sean Aylmer. Enjoy your day.